So here are 3 tax moves that you can make before the end of the year. My name is Dave Zoller, and today I'm going to share 3 tax tips that you can do to maximize your savings this year. But you won't want to wait until the last minute to do these ones, and I'll tell you why. But first, if you're watching this and you just want to talk with someone about these tax tips or tax planning or retirement planning or investment planning, click on the link below and I'd be glad to have a short strategy call with you. So now on to the first tip. If you have an investment and the value is less than what you bought it for, it might be advantageous to sell it for a loss. Now what that does is any potential capital gains that you might have, if you've occurred capital gains throughout the year, you might be able to offset those so that you don't have to pay tax on that capital gain. Now, if you don't have any capital gains, you can actually offset your ordinary income up to $3,000. And that's just when you file your tax return, you'll see you'll be able to deduct up to $3,000 of capital losses. Now, this strategy is called tax loss harvesting, and you should really talk to your CPA or financial team just to make sure that it works for you. Now, on to the second. So this one is more urgent and really needs to be done at least a month before the end of the year. This was, I know it was a hard year for many, and if you're struggling financially, then this probably is out of the question. But if you're doing okay financially, you might be able to increase the tax savings that you're going to get by really maxing out your retirement plan contributions. And the reason why I say that you got to do this or should start to do this now or at least a month before the end of the year is because if you're putting money into your 401k, that's based on a little contribution going in per pay period, right? And there's only a few pay periods left, so there's only a few contributions that you could make before the end of the year. So if you want to max out your 401k, you really need to up the percentage to see if you can get to that max amount. Now, if you're self-employed, you might have the option of a solo 401k, which I would look into. And if you don't have either of those options, then you might be able to do a deductible IRA contribution. Now, that all depends on your income and how much you make this year. Some people end up getting phased out of actually getting to deduct their IRA contributions. So just double check on that. And the third way is to donate goods. It's not just investments and it's not just cash that count as a deduction on taxes. You can give away old kids' toys or furniture or slightly used clothing, things like that. You can give those to places like Salvation Army or Goodwill or other places that are nonprofits. And really, if you're thinking about doing this, I would suggest doing it soon because we're not sure with pandemic and store hours and you know, if things change with how long these places are open or if they have to close down, I don't know. But I would think about doing it now just so you can get the deduction for this year. So those are the 3 tax moves that you can make before the end of this year. I think it's worth start planning now before it gets too late and before it's already December and Christmas time or holiday time. So look into that. If you do have questions about tax, investments, or retirement, click on the link below and I'd be glad to talk with you more. Take care.